Welcome back everyone to the 3K Challenge. We've got another exciting week of irresponsible trading ahead, so let's get to it. Last week, I failed to really take advantage of the market tanking because I sold my put too early, taking a modest $86 gain. I expected the market to gap down into Monday, which I got right, but then I expected it to keep shitting all week. But over the next couple days, it didn't shit, but rather yeeted, and I rolled out of my puts to lock gains. So when the market unyeeted on Friday, I didn't make any further profit. I also got assigned on my Gamestop short put with a basis of $31.80. So far, I'm in the hole about $81 in that position. So last week, I was essentially flat. That wasn't really the week I had in mind, and reading the comments section, everyone seems to have their own answer on how to do better. Hey man, you gotta roll into spreads. Habibi, you gotta hold longer. You gotta go long volatility. Hey man, you gotta inverse Kramer, huh? Everyone's a fund manager on Sunday morning. But every week is another opportunity to lose money in a new and exciting way to disappoint my viewers. So let's jump in. Alright boys, I fell back asleep but woke up just a few minutes after the market opened, luckily. My portfolio is at about 3,895 this morning after another gap down to start the week. Right now, I've got 102 shares of Gamestop after getting assigned on Friday, so my basis is $31.80 on those shares. This is a good time to note that Robinhood does not correctly calculate tax basis after put assignments. When you get assigned a put, the premium is subtracted from your strike, and that is your tax basis for when you sell according to the IRS. Robinhood is instead treating this position as though I made a $120 capital gain on last week's short put, and that 33 is my basis on these 100 shares. That's not how bases are calculated, and when Robinhood sends me my tax forms, it will note that I made no capital gains on my short put, but my basis on shares is $31.80, not $33. Any other broker would calculate this correctly on the home screen. That's just another way that Robinhood is fouling its users. But anyway, I'm going to keep wheeling GameStop in accordance with my plan, so I will use my 100 shares as collateral to sell a covered call. So let's open the options chain, and I'll flip to this Friday's expiration and sell the $33 strike for about $55. My alternative would be to sell the 32 strike for a higher premium, which was my original plan, but after thinking about it more, I don't want to cap my gain that close to my basis. GameStop is the type of ticker that has the ability to move 10% or more in a day like it's nothing. So I will accept the lower premium in exchange for more room to the upside. It looks like the spread is pretty wide here, so I'll ask for $58 instead. Grab that extra $3 toward the next round of shares. And it looks like I got a fill immediately. Should have asked for more premium. I've also got over $600 cash left, and I'm supposed to have my 2-year-old daughter Becky pick a stock for me in accordance with this vote from week 2. This isn't something I'm going to make a habit out of. I really don't want to do this, but I'll do it just this once, just for fun. I explained the rules to her that she's picking letters to go up or down. She's not perfect with her alphabet and has basically no concept of currency. In other words, she's right on par with the other Wall Street Bets traders. Let's see what she's got for us. All right, Becky, you want 1 letter or 2 letter?
2 letters.
Okay, 2 letters. What's the first letter? Okay, you got all your Pez. Now, what's the first letter?
B.
B? Okay, what's the second letter? Becky, what's the second letter?
B.
B? That's Blackberry. Is that what you want?
Yeah.
Is it going to go up or down?
Huh? Maybe go up.
It's going to go up.
Like it.
Blackberry is going to moon?
Yeah.
You sure?
Yeah.
Okay.
Huh?
All right, we're going to buy a call on Blackberry. That's what you want?
Yeah.
All right. You heard it here first, guys. BB is the way she wants to go. All right, you heard the girl. It's calls on Blackberry. I'll buy 1 strike out of the money, 4 contracts for $5 each. I should have asked her how many contracts she wanted, but I didn't even think about it. Anyway, if Blackberry announces that it's being bought out by Apple this week, I'm gonna lose my freaking mind, and buy Becky an entire collection of Pez dispensers. So let's sit tight and see what the market has for us this week. All right, guys, here we are at about 3:30 on Wednesday, and as you can see, things are they're not looking too pretty in my portfolio right now. So first thing we've got up is Becky's Blackberry calls. You know, at one point, I did take the position was doing very well at one point, and I did take a screenshot when it was up 100%. Now, I know the rule. If it's good enough to screenshot, it's good enough to sell. But of course, you know, I didn't do it. I was holding out for, 200% gain? 100% gain just wasn't good enough for me. And now here we are. It's looking like the money's just pretty much gotten thrown out. I'll hold it for the end of the week. I mean, there's really no harm in doing so now. but I should have exited this position prior. But the one that's really killing me is this GameStop position. So I've been wheeling it at about $33. It was okay for a little while, but meme stocks have just been getting hammered. I mean, we saw Bed Bath & Beyond took a bath today, on this this big exciting announcement was basically that they're diluting shares and closing stores. So it's not looking too hot. They're down. I mean, they were kind of flat for the week, but today down 20%. It's taken all the other meme stocks with them. So GameStop being one of them. We've got earnings next week, so I think I'm going to just wheel it at least one more time and hope either earnings is not completely pitiful or the apes just come rallying back, but I'm not too confident with it. The other choice I was looking at the beginning of the week was TQQQ. In TQQQ, it's dropped pretty much just as much as GameStop has. So it's not looking hot right now, but my plan at this point is wait it on through the end of the week, and then I'm gonna have to reassess going into next week. Do I want to continue wheeling GameStop, or do I want to flip over to TQQQ, which I think will have the longer longevity? The challenge started off great. I was making money, but then all of a sudden the wheels fall off, and that's the reality of trading meme stocks, especially if you're gonna be wheeling them. Sometimes you're gonna have those 300 down weeks, losing 10% in a week. I mean, look where this portfolio is now. That's $3,750. It's only $250 gained, and that's less than 10%. This is no reason to panic yet, but if GameStop keeps getting beaten down, I'm going to have to look for an opportunity to jump ship. Maybe that'll happen after earnings, or maybe I need to buy a protective put going into earnings, and I'll figure that out later. But the real deal right now is going to be to figure out some way to deploy this $640 in cash that I just have sitting here. Where can I put this to get the wheels back on? Do I want to just short the market? Feels a little bit late for that now, but I'm going to have to keep my eyes open. But right now, I'm sticking it out until the end of the week. We'll see where this goes. All right, good morning, everybody. It's about 8:10 in the morning on Friday, September 2nd. Normally, I like to do my end of the week roll-ups after the market closes, but I'm not going to be able to do that today because my in-laws are coming into town, and when they're here, my office becomes their bedroom. So instead, I'm going to have to do this before the market opens. But unless something really crazy happens today, I can almost promise you that there's going to be nothing exciting to talk about by the end of market anyway. Because we look at where my portfolio is right now, back down to 3,690. And we're looking at the loss for the week at 8.5%. That's really rough. But this is what happens when you trade meme stocks. You're going to have those up and down weeks. And this has been nasty. On the positive side, we've got this GameStop covered call, the $33 strike. It's almost certainly going to expire worthless. So that'll be a $58 cash raise on this one. And on the other hand, we've got Becky's Blackberry calls. Now, I should have sold it when I was up 100% on the position. It looks like now we're going to go from a 100% gain to a 100% loss. This isn't the first time I've wasted $20 on Becky. It's probably not going to be the last time. And like I said, this one's my fault anyway. So Becky, really some impressive trading getting us to that 100% gain. Bad trading by me, knocking it back down to a 100% loss. So between these two, that's going to be either a $38 or $42 gain, depending on what I can do with these Blackberry calls, if I can sell them for $1 or not. But that's the only good to speak of, is that $38-ish gain. Now, the market dropped a little bit, but the real pain is coming from GameStop. It's making a little bit of a move pre-market up to about 28, but that's what's passing for good news these days. I mean, look at 1 week, this thing is down $3.50, is 11%. For GameStop, that's a pretty big move, $3.50. So the damage that this has done to my portfolio is pretty immense. We've seen for a couple months it starts getting down into these high 20s, and then it starts rallying back up. So I'm really hoping that's what happens. But there have been points where it's gone down into the low 20s, or even here, it broke $20 March 14th before it rallied back up again. So it is tough to be confident right now. But on the positive side, I can say that it has rallied back several times from big drops. And next week is earnings on Wednesday. I don't expect too much out of earnings because I don't think there's going to be really any good news to speak of. Their NFT platform has been a complete flop, and they were really hyping that up for a long time. But what I can do next week is sell the $33 covered call again. Now I can sell with my basis all the way down to $31.50, but I think I'm going to sell the 33 next week. Maybe I'll get lucky and I can get $60 for it. If GameStop does unexpectedly rally, then I might open up what I call a Sonic spread on it. We could talk about that next week if it happens. I think more likely, GameStop goes basically nowhere, and I'm forced to make a decision if I want to continue wheeling this thing, or if I want to close it out and move on to something else. My alternative to GameStop was TQQQ, which also is performing like complete garbage. It even fell more. It fell more than GameStop did, almost twice as much. So at least I didn't make that decision. But in any case, I've probably got about a $38 gain over here, so I'm going to use that to buy shares of QYLG, stick to the plan, reinvest any earnings that I do have. So I'm going to buy 1.5 shares with that $38. Try to do it pre-market. All right, during extended hours, you can only trade in whole shares. All right, so I'll queue up the fractional order for when the market opens. All right, buying with a 5% collar. Okay, that's fine. All right, so that's done. It's been pretty rough in this challenge so far. I'm still up a little bit, so at least I'm not losing money. But I feel like I could have done a lot better by doing a lot of other things other than wheeling GameStop. So I've made a couple of mistakes here, but I want to get this portfolio back on track. Next week is going to be pivotal for me. We need to see what GameStop does. Hopefully I'll get a chance to hop back out at least my basis. Best case scenario, the thing rallies, and I can participate once again, perhaps with a Sonic spread next time. All right, take care, everybody.